Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 18th, and we got a couple economic news releases scheduled for today. Otherwise, the day's kind of light so far. We had the weekly jobless claims number, and last week we had 348,000 people applying for unemployment. We figured there'd be, in that same range, about 346, and it crept up a little bit to 352. So something obviously we have to keep our eye on, as it did creep up for a couple weeks, and it came down to 348. We were like in the 360s prior to, and then it looks like it could creep up a little bit again. So I definitely want to keep our eyes on weekly jobless claims. We also have the Philly Fed Index, and what that is, it's the manufacturing sector in the Philadelphia region for the month of April. So back in March, we had a 2.0. So anything above 0 is considered expansion, but albeit very slow expansion. At 2.0, we figured it would kind of improve a little bit to 4.0, and it actually dropped down to 1.3%, 1.3 on the index for growth a little bit. So there's still low growth, but it's very, very slow growth. We got leading indicators. This is for March numbers. So back in February, we had a 0.5% growth. We had about 7 months worth of consecutive months that were seeing growth in the leading indicators. And this is kind of an indicator that kind of shows us future expansion if where the economy is looking to go. And then we had a 0.2. We figured it kind of slow down a little bit, and it actually went negative. So we saw some contraction. So this is something really to kind of keep an eye on. Right now, the economy is looking like we're maybe running a little bit out of steam, which is kind of to be expected when you see Europe struggling. China GDP numbers were lower and slow, so we're kind of caught in between. And as we've said all along, globally, we're all kind of intertwined. So at some point, we will kind of lose some steam as a result. But one thing that will keep us going right now, real estate's been pretty strong, so that will kind of keep us. But even some of the numbers we're seeing on the real estate are showing some slowdown on there. So something we need to keep our eyes on. All right, so let's jump over to high for the headline news. We had stock market down, and a lot of it has to do with I'm sorry, this is from yesterday, but stock market's down due to the numbers from the head from what we just talked about, but also there's a lot of disappointing earnings out there. So right now, as the investors, what they're looking for are either the companies are going to hit their earnings or exceed them, and if they're not, they're basically feeling kind of sour right now, as momentum showing that we're kind of slowing down. So they want to see good news and kind of spike up hopefully some hope that the economy is not going to slow down as much as they may think it is. So let's jump over to the bond market, see how this is playing out. So we're kind of, yesterday we end up kind of in negative territory. We end up at -6 for the day and end up at in the bond market at 104.13. So today we kind of are right now we are testing. As you can see, we're kind of testing that ceiling, and for the past week, been kind of going in a sideways pattern for the most part. So right now, there's really no change in rates today. The pricing on interest rates remain the same as where we left off yesterday. So again, not a lot of news that could really change it unless we have some surprises that may come up. But as of right now, there's really no impactful news that really should big impact that will swing the markets one way or the other. But yeah, definitely we need to keep eye on it. And if the economy still goes in the toilet a little bit, the money's can come out of the stock market, go into the bond, we'll see some improvement in the interest rate. So that is a possibility on that as well. All right, folks, thanks for watching. You guys have a wonderful day. We will see you guys tomorrow.